It is 9:10 a.m. Pacific Daylight Time. It's the 16th day of March 2026, and this is episode 1278 of Bitcoin and SEC dropping the case against BitClout. Again, a zombie shitcoin rises to the surface like a turd in a river. It's just, it's amazing that all these, when these things come back up, it's like being shot back into time, like by a catapult. Hell, I'd completely forgotten about BitClout as a thing, and here we are again. It's going to be that starts us off here on the Bitcoin and podcast with me, your host, David Bennett. It's all the news you can use about Bitcoin and macro from around the world. Next, we're going to talk about Hive. Hive, as a Bitcoin miner, going to change things up at their operations. And it may not be the best thing for them because there's a report out, or at least there's a debate. Let's call it a debate over the impact of switching between Bitcoin mining and going over to do AI. We'll see what they're talking about. Milei, Argentina's president, or whatever you want to call him, he's back in the news. Some new shit has come to light. Let's just call it that. And then BlockFills no more. And if you don't know what BlockFills is, you will after that particular story. In the second half of the show, we're going to look at Kalshi and Kalshi and Polymarket are both making predictions on the midterm elections. We'll see what the people are thinking is going to happen. And then we're going to run to South Africa. We're going to talk a little bit about MetaPlanet, and of course, Strategy bought some more Bitcoin. But Bernstein has something to say about Strategy, and that will end the show for the day. But first, the SEC has dropped their case against BitClout founder with prejudice. What does that mean? It means they can never bring these same charges against him again. It's sort of like what they call double jeopardy, where you can't be tried for the same crime twice. This is sort of like that, but when you drop a case with prejudice, it's basically the court saying, I'm never going to hear this shit again. The prosecutors are never allowed to do anything to this guy, which I find a little incredulous here because this guy's a fucking scammer. But hey, it's Monday morning. It's time to turn on the scam machine. The U.S. Securities and Exchange Commission has dropped a 2-year-long case against the founder of the blockchain-based social media platform BitClout, Nader Al-Naji. In the joint dismissal stipulation filed in the U.S. District Court for the Southern District of New York, of course, on Thursday, the SEC cited the Crypto Task Force, which was tasked with developing a regulatory framework for crypto in January 2025, and a reassessment of the evidentiary record as the basis for dismissal. Okay, I gotta pause. So they're dropping this case completely against this freaking scammer because the developing regulatory framework around crypto, they're talking about the Genius and the Clarity Acts. The Genius has been passed. Clarity they're still working on. Some people think it's bad. Some people think it's good. It's neither here nor there. That's what they're talking about. Yet we keep getting signals from that same thing that mixers are okay. And yet, guess who's not going to get their case dropped? Yeah, Roman from Tornado Cash. They'll let this guy go because of it, but no, not the guy, not all these other guys. I find this offensive in the extreme, but the regulator cautioned that this case outcome doesn't necessarily mean other similar enforcement actions will receive the same treatment. There you go. The commission's decision to exercise its discretion and seek dismissal for this litigation is based on the particular facts and circumstances of this case and do not necessarily reflect the commission's position on any other case. So, Roman, you can just go rot in jail, but we're going to let Scammer Man go. That's cool. Under the Trump administration, the SEC has slowly been walking back its hardline stance toward crypto firms, dismissing a growing number of enforcement actions. Cointelegraph has contacted the SEC and the DSO blockchain, where Al-Najji leads the foundation supporting the blockchain for comment. Al-Najji is a former Google engineer, the founder of the Basis protocol and creator of the DSO platform. He founded BitClout and launched it publicly March 2021. The complaint accused Al-Najji of raising more than $257 million by selling the native token of the BitClout platform, BTCLT, while telling investors the funds wouldn't be used to pay any BitClout team member. Al-Najji was also accused of spending more than $7 million on personal items, including rent for a Beverly Hills mansion and cash gifts to family members, and also mischaracterizing the inner workings of the platform as decentralized with no governing company controlling it, despite allegedly running the project himself from behind the scenes. As part of the settlement, Al-Najji has waived any claims for reimbursement of legal fees or expenses against the SEC. The regulator has dismissed the case with prejudice, meaning it can't bring another case against Al-Najji or the relief defendants mentioned, including his mommy, his wife, and several companies under his control, again, using those exact same charges. The Department of Justice also ended a parallel case accusing Al-Najji of wire fraud, in February of 2025, without prejudice, so he could be charged again. Al-Najji said in an X post last year that the government's case was dismissed because it didn't hold up to scrutiny. So here we go, starting off our week with a clear violation of humanity. They're going to let Roman Storm rot. They're going to charge him again. But this guy, not only does he get off scot-free, he never has to face these charges again, at least by the SEC. And that pretty much means the Department of Justice is going to fall in line with that. This guy, he gets to do whatever he wants. And I wish I knew whether or not he got to keep all those cash disbursements he made to his family and friends, whether they get to keep them. Does he get any of the stuff that he bought? I mean, does he keep any of the money? That's not talked about in this Cointelegraph article, but it's sad. It's sad to see that this guy's getting off because of the, quote, changing landscape of crypto regulation, which includes the fact that they're okay with mixers now. And yet this guy gets off, Roman's going to rot. Your United States government at work. Let's move on to Hive. Hive to phase down Bitcoin mining in Sweden as it expands AI data center capacity in Canada. The Block's James Hunt brings it to us. Hive Digital Technology said on Monday it is reducing Bitcoin hash rate production at its Boden facility in Sweden as the company shifts its focus towards AI and HPC infrastructure. That'd be high performance compute. In a statement, the company said its Swedish subsidiaries have faced increasing challenges in their traditional hash rate production business, including enforcement actions and what it describes as, quote, misapplications of existing tax rules by Swedish authorities. Hive said authorities imposed a security deposit requirement tied to disputed tax assessments, despite the company receiving supportive opinions from several law firms, a Tier 1 accounting firm, and local academics specializing in Swedish value-added tax matters. Those developments have created operational uncertainty and limited the company's ability to continue operating its ASIC-based hash rate production model on a consistent economic basis, according to Hive. As a result, the company is redeploying resources towards its expanding AI and high-performance compute strategy in Europe, and said it will also expand or explore a broader phase-out of its Bitcoin hash rate production model in the country of Sweden. The transition is already underway at Hive's 7-megawatt data center in Boden, which the company said is being upgraded to Tier 3 high-performance compute standards capable of supporting enterprise-grade GPU clusters. Construction is in progress, and the facility is expected to support clusters based on the NVIDIA GB300 GPU architecture designed for AI training and inference workloads. And at the same time, Hive said its Buzz, high-performance compute subsidiary, is expanding its liquid-cooled AI data center footprint in Canada. The company plans to increase capacity from 4 megawatts in Manitoba to 16.6 megawatts. That's a 4x increase, dudes, across 2 provinces through its strategic data center partnership with Bell Canada AI Fabric. The expansion includes a new co-location facility in British Columbia, providing an immediate 5 megawatts of capacity with an option to scale by an additional 7.6. Hive said the new facility could support the deployment of about 2,000 next-generation AI-optimized GPUs, complementing capacity for roughly 2,000 GPUs at its existing Manitoba site. In total, Hive said it now has a near-term ramp to more than 4,000 GPUs in Canada and a growth path to more than 6,000 GPU deployments through its data center partnerships and its own facilities. The company is targeting $200 million in contracted annualized run rate revenue from its high-performance compute business by the end of its fiscal year ending March 31st, 2027. The strategy reflects a broader trend among publicly traded Bitcoin miners seeking additional revenue streams beyond traditional mining operations. While Bitcoin mining ASIC machines are designed specifically for hashing and cannot run AI workloads, operators often control large power contracts, data center facilities, and advanced cooling systems that can be adapted for GPU clusters used in artificial intelligence training. Shares in Hive traded up 5.6% early Monday following the news. There you go. So in this particular case, I hate to say it, but Hive is making the proper move, because this isn't just about Hive saying, we're done with Bitcoin mining. We're not getting as much money as we used to, so therefore we're going to go to AI and jump on the AI bandwagon. No, what this reads is that because Sweden is being a bunch of dicks, that they kind of have no choice. That well, it's not that they don't have a choice. They do have a choice. They don't have to do this, but it's an easy off ramp, because Sweden's making it difficult for Bitcoin miners to exist, as we can tell by what Hive was saying about the tax landscape, that they're just going, okay, fine, screw it. We'll just go to HPC. So this brings up a problem. Is it possible that infrastructure level squelching of Bitcoin could happen at the nation state level simply by continuously keeping the pressure on Bitcoin mining while alleviating the pressure to AI? Well, this is quite the pickle, because remember all those people screaming about Bitcoin was going to boil the oceans? Well, it seems very clear that AI has already surpassed the amount of electricity being used by Bitcoin by spades. And nobody seems to be giving a shit about it, or at least they're clearly not vocal about it. But at one point or another, hypocrisy, comes to light. And it probably will in this case too. Now, when? A long time from now. Well, I'm thinking medium term. I'm thinking like the next couple of years. You'll probably find a whole bunch of people just screaming bloody murder about AI killing the planet, just like they said. Here's what I'm waiting for. I'm waiting for Greenpeace USA to get in on this. And if they don't, then their hypocrisy is basically laid bare for all to see in the world, because they went up against Bitcoin in a really hard way starting a couple of years ago. And every once in a while, you still hear them talk about it. Still, though, I'm glad that Hive has made the statement that, look, it's like we're doing this simply because it's becoming inhospitable in Sweden to do this. But here's the other thing. Why isn't Canada freaking out about the electricity usage like they freaked out about Bitcoin mining's electricity usage, when all of a sudden we're talking about 4x amounts of power increase at this one Manitoba site. 4x, from 4 megawatts to 16.6 megawatts. And yet Canada seems okay with that. They seem okay. They were, like everybody else, they were screaming bloody murder about Bitcoin, but nobody seems to want to say a single word about how much electricity and water the AI uses. Because it's all bullshit. It was bullshit when they were talking about it with Bitcoin. It's bullshit now. What one thing that AI does is it's going to literally demand a retooling of power infrastructure across the world. And quite honestly, there's a lot of places that need that. A lot of the grids in the United States kind of on their last legs. So if it takes AI to get this shit fixed up, I'm not throwing a fit. I'm just not. And plus, maybe they'll burn a little bit more natural gas, because I think we're probably going to need some carbon dioxide in the air to grow all the damn food for all the damn people that everybody keeps saying is going to happen. It's all so tiresome. But from Cointelegraph, we've got a further take on AI data centers as the gold rush sparks debate over the impact on Bitcoin mining. So let's see if there's a relationship here. A new debate has emerged over whether a continued shift by Bitcoin miners, like Hive, toward artificial intelligence could impact the network's security. While some argue that miners leaving the network would leave it susceptible to a 51% attack, others argue it will simply trigger the Bitcoin network to rebalance itself as designed, making it enticing for miners again. Quote, AI has killed Bitcoin forever, says crypto trader Ran Nooner, arguing that it has become Bitcoin mining's biggest competitor because both industries compete for electricity. Let me pause and say something about Ran Nooner. This is Crypto Ran Man, I believe is his handle on Twitter. And he's just been a thorn in Bitcoin's side ever since he latched onto Bitcoin and crypto in general. He was just like, I don't know, he was some journalist dude, had somewhat of a name, and then all of a sudden here comes crypto, and runs with it. And next thing you know, he's all about Bitcoin. And then every single time anything even remotely potentially looks bad for Bitcoin, he is sounding the death knell. This is when Bitcoin dies. He's done it so many times, and now I know why he's doing it. Engagement, that's it. He doesn't really know, and I don't think he actually really gives a shit. Stop listening to Ran Nooner. Just like BitClout. I haven't heard this guy's name in a while. And that's probably why he's saying what he's saying. So that now I've said his name. Now his name is back in my mind. It's come out of my lips. So now it's back on your mind. Engagement works, even if it's bullshit. Be careful with people like this. They're propagandists and they're only out for their own ass. So just please. Quote, AI is willing to pay much more for electricity, he added, explaining that Bitcoin mining revenue per megawatt is around $57 to $129, but AI data center revenue per megawatt is up to 8 times higher at $200 to $500 for the same electricity, which is why miners are starting to pivot. He literally provides no data as to whether or not that's correct. Earlier this month, Core Scientific secured up to $1 billion in credit for AI hosting. Mara Holdings recently filed with the SEC signaling its own intent to sell some of its Bitcoin as part of an AI pivot, and Hut 8 signed a $7 billion AI infrastructure agreement with Google in December, argued Nooner. Meanwhile, Cypher Mining cut its hash rate to focus on AI compute, and Bitmain co-founder Jihan Wu has stopped mining and pivoted to AI, Ran Nooner added. Quote, so If I were a miner, it wouldn't be a tough decision, and that's why every day more and more miners are leaving the network, end quote. Sounds like a doomsday scenario for Bitcoin, but not everyone agrees. Bitcoin pioneer and cryptographer Adam Back argued that difficulty adjustments would only force the least efficient miners out and profitability would then improve. Quote, what happens to Bitcoin is simple. Tick tock, next block. Difficulty adjusts downwards. The least efficient and AI switchers move out, and Bitcoin mining profitability converges to AI profitability, QED, end quote. Further quote, if AI outbids miners for electricity, miners just turn off until the difficulty adjusts and is profitable again. That's literally how Bitcoin works, added investor Fred Krueger. However, Nooner argued that falling hash rates, which are down 14.5% since their October peak, means that there are fewer miners to secure the network and a higher potential for 51% attacks. This is complete bullshit, by the way. This has all happened before during bear markets. And automatic network difficulty adjustments usually compensate for it, quote, but this time is different because we don't have the energy, end quote. Bitcoin ESG specialist Daniel Batten disagreed and said it was the other way around as, quote, the evidence tells us that AI is dependent upon Bitcoin for its expansion, end quote. Yeah, let's pause right there. Let's be careful with that kind of thing. We don't know. We just don't know. Would it be great for AI to just converge on Bitcoin and using the Lightning Network and Fedimint and eCash and Arcade and Arc and all the rest of it for inter-agent commerce and agent to human and human to agent commerce? Yeah, it would. It'd be great. But that's not written in stone, not by a long shot. In fact, there's going to be a really good argument that stablecoin usage is going to be right alongside Bitcoin when it comes to these agents and whatnot. And I don't mean to burst anybody's bubble, but let's be real about this, right? I mean, I love Daniel Batten. He writes a lot of great stuff, but the evidence, in my opinion, the evidence does not tell us that AI is dependent on Bitcoin. At least it doesn't tell me that yet. So let's put that shit, that exuberance, that youthful exuberance in our back pockets, right? It still is going to be up to us to force that issue as human beings on this side. I don't know, maybe continuously talk to your LLMs and say how you would only rather use Bitcoin for your AI agent commerce, whatever. Anyway, let's continue. It wasn't all about high demand and expensive power, as Bitcoin mining can use stranded energy, act as a flexible load balancer for energy grids, and use older equipment for cheaper energy, Daniel Batten argued. Nooner said one way to ensure AI doesn't overshadow Bitcoin will depend on whether prices go up. Quote, what I hope is that Bitcoin has one green candle, maybe because of the war, maybe because of the regulation. Who knows? If you're watching the Bitcoin price action during the war, that's exactly what's happening, he said, adding that the other scenario where Bitcoin price continues to fall is pretty much a Bitcoin doomsday, because Rand always does this shit. He does the same shit all the time. It's like fucking clockwork with this guy. Bitcoin has seen 5 monthly red candles in a row, something that hasn't happened since the 2018 bear market. However, March is currently shaping up to be positive, blah, blah, blah. Yeah, positive with an 8% gain. Okay, fine, whatever. Just be careful with people like Rand Nooner. He doesn't know what he's talking about, and the only reason he says what he says is because it works for him. He gets followers. He gets people to listen to him. You start pulling I could do the same thing, except I don't want to wreck my credibility. Like nobody that is a serious Bitcoiner that's been in this space for longer than a few years gives Rand any credibility at all. And I sure as shit am not going to take my reputation and put it in a brown paper bag, soak it with fucking diesel, light it on fire, and throw it out a window simply because I want more followers by calling the death of Bitcoin. It's just stupid. And then we go to Argentina. Let's go down south, where $5 million document links Milei to Libra promotion. Ooh, again, turds rising up to the surface. Atlas 21 brings it to us. A document recovered from the phone of a crypto lobbyist, Marcio Novelli, describes an alleged $5 million deal linked to Argentine President Javier Milei's promotion of the meme coin Libra. The story was published by Argentine investigative outlet El Destape, based on a forensic analysis of devices seized from Novelli by the Directorate of Technological Support for Criminal Investigations. The file, written in English and dated February the 11th, 2025, so just last year, 3 days before Milei published his promotional post about Libra on X, opens with the words, quote, "Hello, friends. This is the final agreement discussed with H," end quote, and outlines a 3-part payment structure. $1.5 million in liquid tokens or cash as an upfront payment, an additional $1.5 million tied to Milei publicly announcing Hayden Davis as his advisor on X, and a final payment of $2 million contingent on the signing of a formal consulting contract on blockchain and artificial intelligence to be signed in person by Milei with his and his sister Karina Milei's review. The H referenced in the document is believed by El Destape to refer to Hayden Davis, CEO of Kelsier Ventures and a central figure in the creation of Libra. The document does not explicitly specify who was to receive the payments. Yeah, well, that's just, if you're doing fraud, which this is, that's good practice. Anyway, according to El Destape, the $5 million would correspond to sums intended for the Milei siblings and the intermediaries connecting them to Davis's operation, including Novelli himself, Manuel Terrones Godoy, and Sergio Morales. The figure coincides with what Argentine businessman Diogenes Cesares publicly stated after the scandal broke, that he had learned a senior government official had received a payment of that amount in connection with Libra. Despite requests from civil parties in the criminal proceedings, Cesares has not yet been summoned as a witness. Forensic call records from Novelli's devices reveal a dense pattern of communications around the token's launch. Milei published the Libra post at 7:01 p.m. Argentine time on February the 14th, 2025. In the minutes immediately before and after, Novelli and Milei exchanged a series of calls with multiple conversations between 6:54 p.m. and 7:03 p.m. Novelli then attempted to contact Karina Milei, who called him back at 7:17 p.m. for a conversation lasting over 2 minutes. As Libra's price collapsed that evening, the communications network widened. Between approximately 10 p.m. and midnight, Novelli spoke with presidential advisor Demian Ridal, KIP Protocol's Julian Pe, and Milei's senior advisor Santiago Caputo. Calls between Novelli, Caputo, and Pe continued in rapid succession past midnight. At 12:36 a.m., February the 15th, KIP Protocol issued a statement declaring that Libra was a success and that Milei had no involvement in its development. 2 minutes later, Milei wrote that he had simply shared what he believed was a private project, denying any connection. A second document dated February the 16th, 2025 was also recovered from Novelli's phone and appears to contain a draft public statement for Milei aimed at containing the fallout from the scandal. The note reportedly includes language supporting Libra while simultaneously denying financial involvement, preceded by the phrase, quote, "This is the only thing that saves him, me, and us," end quote. A forensic analysis previously reported by Argentine newspaper La Nación had already revealed that Novelli and Milei exchanged at least 5 messages at 7:01 p.m. on February the 14th, precisely at the moment Libra's contract address was published on X. Experts who testified before the Argentine Congress confirmed that the address was not publicly available online at the time Milei shared it, contradicting his claim that he had found it on the internet. The Libra token had briefly reached a market capitalization of over $4 billion following Milei's post before collapsing by more than 90%, with 8 wallets connected to the project having cashed out $107 million. An Argentine parliamentary committee had determined in November 2025 that Milei had provided, quote, essential collaboration to the project, recommending that Congress assess whether his actions constituted misconduct in office. Milei has consistently denied any wrongdoing. Argentina's anti-corruption office has cleared him of violating public ethics rules in June of 2025, concluding that the post was personal rather than official in nature. His government had dissolved its own investigative task force into the scandal in May of 2025, just days after a judge had ordered the unfreezing of the president's and his sister's bank accounts. A federal criminal investigation and a class action lawsuit in the United States are still ongoing. Hayden Davis had previously admitted in a video recording that his team had conducted sniping operations on Libra at launch and acknowledged controlling wallets holding over $100 million in proceeds derived from the token. Okay, first, nothing is going to happen to Milei. Second, he definitely had his hands all over this shit, him and his sister. Libra's a scam coin. It's a shit coin. Hayden Davis is a scammer. It's very, very clear. Yet nothing at all is going to happen to Milei. I guarantee it. Okay. Where are we going with this? Hold on for a sec. I had something here. Oh, well, I had somebody lined up for the Circle P, but the website is for sale. So I'm going to have to get a hold of this guy. That's unfortunate. Maybe it's just a mistake. We'll see. But let's go on to the final story for this half of the show. Crypto trading firm BlockFills files for bankruptcy. There's another domino right there. CoinDesk, Will Canny, and Omkar Godboll is writing this one. BlockFills, which is a Chicago-based crypto trading firm, is filed for bankruptcy. On Sunday, BlockFills operator Realize Ltd. And 3 affiliated entities filed voluntary Chapter 11 restructuring petitions in the U.S. Bankruptcy Court for the District of Delaware. The court filing shows Realize reporting assets between $50 million and $100 million against liabilities of $100 million to $500 million, a stark indicator of the mounting pressure in its crypto trading operations, because they were rehypothecating. They were telling people that they had, let's just say, they were telling people that they had this amount of Bitcoin. They did not. And people came calling, and now they're going bankrupt, because apparently no matter how many times we take Bitcoin through these up and down bull and bear market cycles and people get left with their britches down, nobody learns lessons in morals and ethics. They teach that shit in high school and college, by the way. And if you are of that age, I highly recommend you take a morals and ethics class. Because maybe, just maybe, you won't end up in a situation where you're like, A, you got to sleep with yourself knowing that you stole a bunch of money from people because you're a liar. And second, you got to deal with the whole bankruptcy shit. You know, wouldn't you just rather go fishing? How hard is this? Fuck. Quote, after extensive discussions with investors, clients, creditors, and other stakeholders, BlockFills has determined that a voluntary Chapter 11 filing is the most responsible path forward in order to preserve the value of the business and maximize recoveries for stakeholders. The filing will allow the firm to implement an orderly restructuring while maintaining transparency and oversight. Quote, to that end, on March the 15th, 2026, certain BlockFills related entities filed a voluntary petition to restructure under Chapter 11 in the state of Delaware. CoinDesk reported last month that the crypto lender has lost about $75 million and was seeking a buyer or emergency funding. This has all happened before, And it's all going to happen again because nobody gets thrown in fucking prison except for Sam Bankman-Fried. And I don't even think he's going to learn his lesson. I think that dude is so far out on the maximum end of the autism spectrum that he's not going to learn what the hell he did. He's not going to, he just doesn't have the capacity for the empathy to understand that he wrecked hundreds and thousands of people's financial lives forever. He doesn't fucking care. He cares that he's in prison and all he wants to do is get out. That we understand. But let's say that he serves his entire 25-year sentence and he gets out. It's not going to have changed him. There are certain people that there's no rehabilitation. And he's one of them. But, oh, God. Oh, let's run the numbers. CNBC futures and commodities. Energy is getting kind of sacked a little bit today. Brent North Sea is down down a half point, but West Texas Intermediate is down 2.78% to $95.97 a barrel, which is still a high price for oil. Natural gas is down 3% to $3.03 per 1,000 cubic feet. Gasoline is up 0.17% to $3.04 a gallon. And Murban crude is down 5.5 points to 108.09. Metals are mixed. Palladium is up 1.6%. Gold is down 1.5%. Ooh, back below 5,000. $4,988 per ounce. Platinum is up 2.5%. Silver is down 1.5% to $80.06. And then copper is up 1.42%. Ag is fully mixed as well. Biggest winner today is cotton, 3.8% to the ups. No, I missed that one. It's chocolate. Cocoa is up 4 full points today. Biggest loser is soybeans. Wow, down 5%. Ooh. Yeah, yikes. Live cattle is up 1.1 point. Lean hogs up 0.13%, and feeder cattle up 1.72%. The S&P is up 0.85%. NASDAQ is up over 1 point. Dow is up 0.68%. And the S&P Mini is up 0.76%. Bitcoin's chilling out at $73,660 per coin. That's a $1.47 trillion market cap. And now we can get 14.8 ounces of shiny metal rocks with our one Bitcoin, of which there are 20,002,632.41 of, and average fees per block remain normal, 0.02 BTC. Taking in fees on a per block basis. There's 35 blocks carrying 36,000 unconfirmed transactions, waiting to clear at high priorities of 3 sats per VByte. Low priorities get you in at 0.7. We are still under zettahash per second on hash rate. We're all going to die. Rand Nooner was right. The Nooner man. It's going to be fine. 946 exahashes per second is it's fine. We could go to 500. We could go to 250. I'd be fine with that. 51% my ads. It's just freaking ridiculous. I swear to God. From Basil, Friday's episode of Bitcoin and Permanerd with 210 sats says, welcome Kid Warp's Vanilla Shop to the Circle P. Yeah, if you did not know that, I put Kid Warp's Vanilla Shop into the Circle P last week. Jason High with 250 says, I'm against violence or war except in self-defense. But at some point, rising up against the criminal mafia government would be considered self-defense. I'm not sure where that line is crossed. Jason makes a really good point. Generally speaking, if you are a lone individual and you find yourself in a situation where you need to enact self-defense for self-preservation, chances are very good it is a clear-cut situation of, if I don't do something, I'm going to get hurt, maybe permanently, or get killed. So I'm going to act. It's not really, there's really not ambiguity, right? It's like, Like a guy was walking up to me on the street and I just freaked out and broke his neck. No, not really. You know, that kind of shit just, no. But if a guy's running at you with a baseball bat and you know who he is and you know that he hates you, yeah, there you go. Especially if he tries to take a swing. But with a whole gaggle of government officials and we keep using the word the law as their baseball bat that they're beating you over the head and shoulders with, it becomes much less clear cut. It never becomes, it's always very ambiguous. We're not sure. That's that the whole notion of boiling a frog in water, it doesn't really hold any water itself. It's actually not true. If the water gets too hot, the frog will actually jump out if it can. If you give it like steps, if you give it a way to get out, it won't just sit in the hot water. It will eventually say, screw this. But, it kind of works here. We're like frogs boiling in water. And we're not getting out. And maybe we would get out if we were given the method of escape. But remember, it was either, I can't remember who it was. I want to say, it was, what is her name? The orange woman. Lagarde. Whatever her name is, Sophia Lagarde, or I can't remember her first name. Lagarde, you know who I'm talking about. She's like the European Central Bank chick. She's one of the big finance heads. She actually said if you give them an escape hatch, they will use it. So we don't want to give them an escape hatch. She actually said that and there's video of it. There were reporters there that also wrote those words down and published those in their respective journals and newspapers and magazines. We know she said that. Maybe that's why we're not really doing anything. Why we just continuously get hotter and hotter and think that there's just nothing we can do about it. It's sad, but it's true. Nick Dose with 170 says, cheers. Cheers right back at you. Pies with 121 says, thank you, sir. No, thank you. Nostr Gang with 100 says, ma'am. And that's the weather report. Welcome to part 2 of the news that you can use, where traders flip Senate control bet as Democrats overtake Republicans on Kalshi and Polymarket. Yeah, midterms coming up. And here it is from Sebastian Sinclair from decrypt.co. Prediction markets have shifted in favor of Democrats to control the U.S. Senate after the 2026 midterm elections, marking the first time the party has taken the lead in the race's history on platforms tracking the outcome. Yeah, well, that's not been all that long, guys. Contracts on prediction platforms, including Kalshi and Polymarket, now show Democrats with a 51% chance of winning Senate control compared with 49% for Republicans. On myriad markets owned by Decrypt's parent company, Dastan, traders are pricing the chances of Democrats sweeping the 2026 midterms at about 50-50. Quote, the Democratic Party is now favored to win the Senate for the first time in the race's history, said Jack Such, a Kalshi spokesperson, writing for Decrypt. Quote, the race is now essentially a coin flip, with Democrats having a 51% chance to win. The Democratic Party is now favored to win the Senate for the first time in history. Somebody needs a history book. The narrow lead represents a dramatic reversal from a year ago when markets priced Democrats at just 18% probability. The shift reflects a steady repricing by traders over recent months that accelerated in the past few weeks amid escalating tensions between U.S. and Iran. It also comes as a surprise because the Senate had long been expected to remain in Republican hands. While they are widely expected to face a difficult fight to hold the House after the midterms, the Senate map had been viewed as structurally favorable to President Donald Trump's party. Prediction markets allow, well, we know what they do. I'm not going to bore you with that one. But according to Kalshi data shared by Such, This turnaround has been particularly sharp in the past 2 weeks. Since the start of the American military involvement in Iran, roughly 16 days ago, the Democrats' implied probability of controlling the Senate has increased by 11 percentage points. The move suggests traders may be reassessing how geopolitical developments could influence U.S. politics heading into the next election cycle. And while the 2026 midterms remains months away, and they do, prediction markets often react quickly to shifts in political sentiment, economic conditions, and global events. Trading volumes on the market remain modest compared with traditional financial markets, though activity has increased as the race has tightened. Kalshi's Senate control contract has generated more than $2.3 million of trading volume, while the equivalent market on Polymarket has seen close to 900,000 traded. With the contracts now pricing the race as effectively even, traders appear to be bracing for a volatile political cycle in which small changes in polling, policy, and global developments could swing the balance of power to the chamber or in the chamber. Yeah, exactly. Everybody is on a knife's edge about everything. Here's a few. Will it be World War III? That's one. Inflation. Americans at home can't afford shit. Many people can, but a lot more people are really struggling. It's really hard to go shopping for groceries and not just want to throw up. And the only reason you don't throw up is because you don't want to have to replace that food. I know that sounds gross, but honestly, but the gas prices, they're going up, right? To get to the store costs a shit ton more money for a lot of people now. The kind of money, like, it's not that it cost them a shit ton more. It seems like it because it just tipped over to where all of a sudden their monthly budget now does not work for them. And that seems like a major shift in price, even if it really isn't. All these things have, like, where do you put your money? I mean, the stock market's not doing all that well, even though it's rebounding a little bit today. It's well off of its high. It just hit 50,000 on the Dow not terribly long ago. And we're back down to like 46,700. Somewhere around there. People see that. And it's reflected in how much money they have in their retirement, how much money they have in their own private investments. They see these numbers and it hurts. And all of it's happening at the exact same fucking time. And I'm wondering how it is that Trump thinks that this whole Iran thing was a good idea. Could this not have waited? Could it not have waited until after midterms? Because then it really wouldn't have mattered. And I don't buy the whole notion that Iran was just 5 weeks away from having a nuclear weapon. No, they weren't. Because they've been 5 weeks away from having a nuclear weapon for 15 years. So that one, I don't buy that shit at all. Why now? Why now? Does he effectively, literally want to lose the midterm elections? I keep asking myself that question, and I'm not coming up with any answers to the contrary. It doesn't mean that that's exactly what he's doing, but I don't have any evidence that he's not doing that. I swear to God, it looks like he wants to throw the election. And if that's the case, you got to ask yourself, why? But I don't have time for it because we're going to take a trip to South Africa where Eskom is considering discount power for Bitcoin miners as solar creates a surplus. So they spent a bunch of money on solar and now they have too much electricity. Micah Zimmerman, Bitcoin Magazine. Eskom, a South African electricity public utility, is exploring plans to sell excess daytime electricity to Bitcoin mining companies as rooftop solar installations reduce grid demand during daylight hours. Speaking at the Biz News Conference 2026 in Hermanus, Eskom chairman Metjo Ndai, I can't pronounce it, said the utility is evaluating ways to monetize surplus power. South Africa's rapid adoption of rooftop solar system has begun to reshape the entire country's electricity demand profile. Many households and businesses now generate their own power during daylight hours, leaving Eskom with a bunch of unused capacity once solar panels begin producing electricity. Nati, however you pronounce it, said the pattern is increasingly predictable. Demand spikes in the early morning as households prepare for work and businesses open. As solar generation ramps up later in the day, grid demand falls, leaving Eskom with a bunch of surplus electricity. Eskom is looking at creative ways and means of using that capacity, and one option under review is discounted electricity to Bitcoin mining companies that operate in South Africa. The sector runs large data centers that perform energy-intensive computations to secure the Bitcoin network. Nadi said industries such as Bitcoin mining are contributing to rising global electricity demand. He said that the technology did not exist 20 years ago, but now represents a growing source of power consumption. Selling excess electricity to the miners could allow them to generate revenue from power that would go unused. The idea also builds on earlier comments from Eskom Chief Executive Dan Marokane, who said that the state-owned utility is examining opportunities tied to Bitcoin mining, artificial intelligence infrastructure, and large-scale data centers. Those sectors require large, continuous electricity supplies that could provide new demand for the generation. Nadi's framed the initiative as part of a broader strategy to adapt to structural changes in South Africa's electricity market. The country's power sector is opening to private investment, allowing independent companies to build generation capacity and compete in electricity distribution. At the same time, rising rooftop solar adoption is shifting demand away from the national grid. Nadi and Eskom said Nadi said Eskom must adapt to remain viable in this competitive environment, and alongside new revenue strategies, they're pursuing cost reductions. He said that the utility plans to eliminate about 112 billion rand, that says R112, so I assume rand as the fiat currency of South Africa, in expenses over the next 5 years. Reducing those costs could help lower electricity prices for households and energy-intensive industries. Despite the changes in the energy landscape, he said South Africa still needs a strong national utility. Well, yeah, of course, because you need to regulate it, right? But it does go to show that this whole rooftop solar thing is working for South Africa. And I mean, I like oil because I get a little bit of money from the sales of oil. But I've always wondered what would happen if we were to replace all of the asphalt tiles on all of the roofs of all of the houses in the United States with thin film solar technology. And thin film solar is something that I remember reading about it a few years ago, and it was going to be great. And then it was the guy that invented it had a company, and he was producing it at a very small scale as sort of a proof of concept. And DARPA came in, the Army's project research and development arm or whatever, and they bought it, and then they shelved it. So now what we see is a bunch of hard panel solar stuff. But if the thin film technology had been developed, it would have been possible. It would have not been outside the realm of possibility to build solar panels basically into asphalt shingles, and then you would have literally been able to nail those to a roof and in some form or fashion kind of connect them together, and then the entire roof becomes a solar panel. I'm not against this, not in the least, because we're going to need a lot of electricity. The sun generates a lot of electricity, or at least a lot of sunlight that we can convert into electricity. Still, though, it got shelved by DARPA, and God only knows if thin film solar is being developed by anybody else. But we're moving on to Metaplanet, where they've lined up $531 million in even more firepower for their 210,000 Bitcoin plan, according to their CEO. And Brian Danga brings it to you from the block. Metaplanet Simon Gurovich, the CEO, said Monday the Tokyo-listed investment firm has secured approximately $255 million from global institutional investors through a share placement priced at a 2% premium, part of a financing package that could deliver up to $531 million in additional firepower to help fund the company's Bitcoin target. The financing combines 107.4 million new common shares at 380 yen, or about $240, or $2.40 a piece, each with a 1.07 million warrants exercisable at 410 yen per share, a 10% premium to the placement price, and that could generate an additional 276 million if exercised in full before the March 2028 expiry. The company also authorized the issuance of 100 million new MS warrants with exercise conditions tied to its MNAV metric. Metaplanet plans to allocate 56.9 billion yen, or $357 million of the net proceeds to buy Bitcoin between April 2026 and March 2028, according to the filing. So they're not slowing down. Metaplanet's stock price got launched starting from October the 10th, or actually it started getting kind of lunched and crunched a little bit before, along with a lot of the rest of the treasury companies, but they're clearly not dead. And I'm really not doing the rah for Metaplanet or strategy. I'm just saying that it seems to me that the survivability of at least the top 5 Bitcoin treasury companies is a signal. It just is. Whether you like them or hate them, they're a signal to legacy financial people who thought this was all going away, and clearly it's not. You don't generate shares unless you've got somebody to buy them. And people are buying not only the Metaplanet stuff, they're buying strategy, especially their stretch that pays out an 11.6% dividend or yield, or whatever you want to call it. And people are still buying it in droves. Not just kinda, not just a little bit. They're buying it, it looks like, at the same rate that they were buying before all these stock prices of all these treasury companies started to go down. It bolsters the whole damn thing. And I mean, I'm not a fan, but I'm also not going to take a giant shit on it, because speaking of strategy, they spent $1.57 billion to buy yet more Bitcoin, specifically 22,337 more Bitcoin, and their holdings now sit at 738,731 Bitcoin. Oh, God, from Bitcoin Magazine. Strategy. The company disclosed a filing of the U.S. Securities and Exchange Commission that the purchases took place between March 9th and March the 13th at an average price of $70,194 per coin. They said that its cumulative Bitcoin holdings were acquired for roughly $57.61 billion at an average price of $75,696 per coin. At the current price of near $74,000, the company's holdings carry a market value close to $50 billion. Let's see here. Where did they get the money from? Does it even say? Yeah, the latest purchases were financed through a mix of equity sales and preferred stock issuance. The purchases were funded through at-the-market sales of Strategy's Class A common stock, along with issuance of its perpetual stretch preferred shares, ticker symbol STRC. The firm also operates several preferred equity issuance programs. That doesn't matter. I'm not going to read the rest of it, because it's really the stretch and the fact that they've issued yet even more shares, because I think it was last Monday that I told you that they bought more Bitcoin, and they did it through the application of stretch, and the fact that they printed more common stock shares, or more shares of common stock, further diluting the people that already own MicroStrategy shares. And yes, I understand that there's a little bit of nuance there, because it kind of, the fact that they have so much Bitcoin, that there are cases in which the shareholders that already own shares of MicroStrategy technically are not really getting diluted because of the price of Bitcoin on the holding on their balance sheet gives the price a certain, gives the price a little price raise. So therefore, but in reality, no matter when you do this, whether the stock price is up because Bitcoin's price is up, or vice versa, or it's neutral, when you print more shares of your company stock, you are in effect diluting your shareholders every single time you do it. You can make arguments that you're not doing it because of this and that and the other. But if I have 100 shares of MicroStrategy and there's only 1,000 shares of the company, and all of a sudden there's 2,000 shares of the company, even if my book value is the same because the stock price rose, I no longer own 1/10 of the company. I own 1/20th. That, my friends, is dilution. I don't give a shit what the stock price says. He's diluting his shareholders. And I urge caution, is what I'm trying to say. I urge caution for anybody who's like, I'm going to buy some MicroStrategy. Just don't. Dude, just buy Bitcoin. No matter what the hell Bernstein says, because they're likening strategy to a Bitcoin central bank of last resort as institutional demand strengthens Bitcoin capital base. This is Nagaavan Nomoyo from The Block. Analyst at research and brokerage firm Bernstein said Bitcoin is developing a more resilient ownership structure as institutional capital flows through exchange-traded funds and corporate treasury strategies reshape the market. In a Monday note to clients, the analyst led by Gautam Chugani said BTC has held up well during the recent Middle East conflict, outperforming traditional assets such as gold and global equity indices. The analyst argued that maturity within the spot Bitcoin ETF cohort and demand from large corporate treasury buyers have completely transformed the asset's investor base, reducing reliance on speculative retail capital and strengthening more long-term prospects. A key contributor to that shift is, of course, strategy, which Bernstein described as functioning like a Bitcoin central bank of last resort through its aggressive accumulation model. The company has continued buying Bitcoin through recent market volatility. And we just talked about all of their stuff, so I'm not going to read their 8K filing with the got included here. But strategy has also expanded financing structures tied to its Bitcoin strategy, including the preferred securities, like the firm's STRC product, paying an 11.5%, not 6, 11.5% dividend, and has seen weekly trading volumes climb above $2 billion, according to the report. Capital raised through these instruments has helped fund additional Bitcoin purchases. Bernstein said the company's balance sheet remains heavily backed by Bitcoin, with roughly $57 billion in Bitcoin and liquid cash against $17 billion in debt. Okay, I got to pause. $50 billion of Bitcoin and liquid cash against $17 billion in debt sounds like a damn good balance sheet. Now, I can caution people all day long about strategy. I can make little jokes about Michael Saylor owning 5 yachts. I think it's because he actually likes boats. Like, what I was saying about like supercars? They're stupid unless you're somebody who is genuinely in love with like Lamborghinis and you have a collection of them because that's what turns you on. I think that's what Saylor does. I think he just loves sailing. I think that's why he's got 5 yachts or whatever. It doesn't matter what I say. $50 billion being leveraged against $17 billion in debt, in my opinion, is a very strong balance sheet, no matter what I say. But at the same time, institutional demand is also accelerated through spot Bitcoin ETFs. Analysts estimate ETFs have absorbed $2.1 billion in inflows over the past 3 weeks, leaving year-to-date outflows at roughly $460 million against the total ETF asset base of about $92 billion. Those funds now control 6.1% of the total Bitcoin supply. The report also highlights the persistence of long-term hodlers As another stabilizing force of the market, coins that have remained inactive for more than 1 year now account for roughly 60% of the circulating supply, a sign that a large share of investors view Bitcoin primarily as a store of value asset. Taken together, the analyst said these structural changes are strengthening Bitcoin's capital base even after periods of volatility. 14% of the total supply is now held by institutional vehicles, including ETFs, corporate treasuries, and governments. Earlier this year, Bernstein argued that bearish narratives around Bitcoin, including concerns of the 4-year cycle and competition with gold, represented what the firm called, quote, the weakest Bitcoin bear case in history. The firm at the time reiterated its long-term price target of $150,000 for the year 2026. And then they talk about price. But so there's Bernstein. And honestly, Bernstein brings to light that this whole $50 billion against $17 billion in debt mark on their balance sheet for strategy. And again, I reiterate, that's good. That looks like a strong, healthy balance sheet. And then there's, of course, the detractors out there are like, yeah, but what happens when Bitcoin goes to $5,000? I honestly think he's going to end up buying more, like a shit ton more. And I'm not calling for $5,000 Bitcoin. I'm just giving an off the cuff remark here because there's always somebody who's like, yeah, but when Bitcoin fails, when Bitcoin goes to zero, when all the miners shut off, like Rand Nooner keeps saying, like all the FUD that we've ever got hand-to-hand combat with since this entire thing started. It's all the same, and it's all the same people, and it always results in what? TikTok next block price go up. Okay, well, that's it. That's it for the show. That's all the news that you can use. Probably nothing else is going to happen today. Well, actually, you know what? I'm not going to say that because I feel like I might be jinxing something. So let me just say this. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.